The NASDAQ is the worst performer among the major averages right now. And two of the hardest hit tech stocks, Apple and Amazon, sinking. Apple on track for its worst day here since 2020. For Apple, tariffs posing huge hurdles for the future of iPhone production as well as its global supply chain. Joining us now to talk about all this, Tom Forte, Managing Director and Senior Consumer Internet Analyst at Maxim Group. Tom, it is good to see you. Let's start right there, Tom, with Apple. I'm looking here. We're down almost 10% here, Tom. What do you make of that move? Is that move justified, Tom?
Yeah, so I think it is, if you look at the recent performance of Apple's stock, it's rare for it to have that kind of outsized move. I think that investors today have been hyper-focused on tariffs to the extent that if you're like Apple and you have a global supply chain, it is going to pose challenges. And I think, though, stepping back, Tim Cook and Elon Musk, I would say, are the two best CEOs at managing, ultimately, government relations with the United States and China. And I think that what President Trump is clearly trying to do is to adjust the trade deficit and bring back manufacturing to the US. So I think the good news for Apple, I guess, and I would say the argument for 10% down being too much, is that it does have pricing power. So it may not be able to completely mitigate the impact of tariffs, but it can raise prices. And then historically, it focuses on the higher margin consumer electronics and generates a ton of free cash flow. And the good news is at some point, you would imagine that the Trump tax cuts could become permanent, and then Apple would just buy back more stock. So long-winded way of saying I think down 10 is too much of a negative reaction today.
Tom, wondering, do you think that valuations for Apple, Amazon, the rest of the Magnificent Seven, have they come down enough that there's been a reset and that they're now fairly valued as opposed to being overvalued? Thoughts on that?
So we'll look at it through the lens of Apple. I have a $215 target and a hold rating, and the hold rating stemmed from valuation, as your question suggests. Apple is trading at north of 30 times PE, and it looks to be growing earnings at, call it, mid-single digit or maybe high single-digit rates. So to the extent it's trading below 215, that would suggest to me that, yes, valuation's been reset. I do think, though, the tariff story for Amazon is quite different. So if you were to compare and contrast Amazon and Apple, Apple has been able to successfully sell to Chinese consumers and Amazon hasn't. So I don't think the Trump policy is going to enable them to suddenly displace Alibaba or JD in China. But I do think the story is different for Amazon than it is Apple.
Just curious, Tom, while we're on it, reports of Amazon kicking the tires on TikTok. What did you make of that? Does it make sense to you strategically, Tom?
So it is remarkable. And historically, Amazon has never really had a social network. So it does make sense to me. And I think of it, I guess, as a different flavor of Twitch. So if you think about Twitch, I think the strategy was cloud and crowd, meaning that you had a ton of video content, which is where the cloud computing comes in, and you had a large audience. The difference being that Twitch focuses on gaming and TikTok kind of focuses on everything. And it is logical to the extent that I think Amazon, along with others, has done a good job using TikTok as a marketing vehicle to improve its e-commerce sales. So while I was surprised by the headline, I do see the logic in Amazon considering acquiring TikTok.
Yeah, my tween and teen boys normally find what I write about for a living to be boring, but when I mentioned last night that Amazon was supposedly looking at TikTok, that caught their attention. Talking more about Amazon, wondering what do you think the tariff impacts will be on Amazon Web Services? I mean, AWS is the big generator of profits for this company. So even though there may be some worries about what's going to happen with consumer spending trends because of tariffs, is AWS, going to be negatively impacted by a global trade war, in your opinion?
Yeah, so first off, complete empathy from me with my teenage children and your TikTok comments. All right, so second, for AWS, I think this would be more of a derivative challenge, meaning that step one is you had the tariff announcements. Step two, you had enterprise revenue decline, meaning you had some sort of macroeconomic event, recession, things of that nature, that would cause spending on AWS to go down, I think that would be the challenge. And Amazon did, or cloud computing in general, we found out that there is some cyclicality to cloud computing spending. So yes, I would agree that if what we're seeing is ultimately leading to a recession, and it's not clear to me that it is, but that would put pressure on enterprise spending and pressure on AWS revenue.
Tom, going back to Apple for a second, you mentioned Tim Cook, and talented executive, talented diplomat as well, Tom. And I'm just curious, to the extent you think it's possible he could secure a carve-out, an exemption, Tom, like he did during Trump 1.0.
Absolutely. And I think the market reaction is that there's no opportunity for that, which I think is, again, an overreaction. So they've already committed to, spending $500 billion. I think that commitment feels, I don't want to say disingenuous, but it feels like it's more of a verbal commitment. I mean, I'd like to see the $500 billion spent, but absolutely, Tim Cook, again, Elon Musk. I say that they're the two best U.S.-based multinational at managing U.S. and China relations. And again, if you think of yesterday's announcement as a starting point, and not the end game when it comes to relations between the U.S. and China, absolutely Tim Cook is capable of doing something that could make this less negatively impactful to Apple.
One more question regarding Apple. It's not really related to any of the tariffs or Trump announcements, but wondering, there's been this perception that Apple has been behind in AI, even with some of the new artificial intelligence features that they've baked into iOS and with the new iPhones. Do you think Apple has proven enough to Wall Street yet that it can catch up in AI, especially in a world where DeepSeek now exists and lower cost, cheaper solutions might be in vogue for some corporate customers?
Yep. So while I am skeptical of AI inspiring consumers to upgrade, I think that a lot of times as tech investors, we look at AI and we look at what AI means for NVIDIA or what AI means for the cloud computing companies. And then we look at what AI means for Apple. And I think it's very different for Apple, clearly different than NVIDIA, and then also different from Microsoft, Google, and Amazon. So I think that I understand this narrative that Apple's behind, but I think we have to consider that AI is different for Apple than it is for others. If you're selling the hardware, it's great for NVIDIA. If you're selling enterprise solutions for AI, it's great for those companies. Remains to be seen if consumers are upgrading because of AI. So it may just be less important for smartphone makers like Apple.
Tom, always great to have you on the show. Thanks for your time today.
My pleasure. Thank you.